Hello. Today I'm going to talk about what is support and resistance levels and why it is important so that you can trade or invest effectively. Alright, so as you can see by looking at the chart, price seems like it's in chaos. 1 minute it's going up, it's going down, up, down, up, down. It ends up going up eventually. But suppose you wanted to buy some Microsoft stock or trade Microsoft stock. You would have to know where the support and resistance levels are so that you'll be buying support and selling resistance. So before I actually go over what support and resistance is, I'm going to do the basics. Here go the price of the underlying stock here, and a candle is 108 is in sync with the price points so that we know what price each of these candles represent. The red candle means there's more selling pressure, and the green candles mean there's more buying pressure, just from a basic perspective. But that is not necessarily the case at an advanced level. But we're going to keep this basic. So let's talk a little bit about what is support and resistance. So support and resistance is where the forces of supply and demand meet. In the financial markets, when there's an excessive amount of supply, price go down. And when there's a lot of demand, price go up. So supply is synchronous with bears and selling, and demand is in sync with bulls and buying. Okay, supply is resistance, demand is support. So what is support? Support is a price level at which buyers think a stock is a good price to purchase. Okay? So what that does is price normally will stop going down and begin to go up. Support levels are usually below the current price, but it's not uncommon for security to trade at or near support. Okay, so as we look at this chart, we could see that every time price come down near this 88, it seems like they are buyers. In the past, it was on a run, and it was a breakout, and this level became support. So support is a price point where buyers think price is a good price point to buy. Resistance is a level where sellers think it's a good price to sell and buyers think the price is too high. So they resist that price, and so then we got support. So in order to draw your support resistance lines, so you could get clarity on how you want to, where you would like to buy a stock, and also where you like to sell a stock from a trader's perspective. So we're going to say these lows are support because we see price bounce here, okay? And we see that at the higher level, price became resistant. So I drew my line, and there's no, this is not rocket scientist to draw, you don't need to be a rocket scientist to draw support resistance lines. Normally what I do is I'll see where the rejection was at, and I'll try to get some historical data. Okay, so I'm gonna say today is March 29th, and I want to see what the support and resistance levels are in this time frame. So I drew my support line where traders are buying. How do I know they're buying? Because I see price going up. And every time we get to that line, I see buyers. See, I see buyers every time. Buyers, buyers, buyers. I know this is resistance because every time we get to my resistance line, I see sellers, okay? So support, so resistance is a price where we're running out of buyers, and so we get more sellers. And support is where we get more buyers, so they force price up. And sellers force price down. I don't really like to talk about supply and demand because it's kind of difficult to understand. So I just like to talk about as an individual, if we go shopping and we look at a product and there may be many brands, we're going to select the product that is best for our needs. So if the same exact product, one costs $5 and another one costs $8, you may resist buying the $8 product and get the $5 one. Okay? So you support $5. You support that price. Same concept. They support this price. The $8 product, you don't support that price. So we got a whole bunch of buyers that support these prices down here. Ooh, I support it. And so they push price up as they buy. Price goes up. Here, there's not a lot of buyers up here. Here's one buyer up here. And they just didn't know any better. But there's more sellers up here. So since you don't have anybody to sell to, you need to sell for what you could get. So there's a resistance level here at 95 and a support level here at 87. So we got some clarity out of this chart. So now this is what, March, and now we know that we're near support. And if we're looking up by Microsoft, we looked at the exact right time. We're at a level where buyers normally step in. Support and resistance is just a way to get information about where the buyers and the sellers are located, okay? Now, just because there's sellers here doesn't mean there'll be sellers there in the future. Just because there's buyers here don't mean there'll be buyers here in the future. But at this point in time, that is the way the stock is moving. This is called watching price action, and you could see as they get to support, it go back to resistance, and then it goes back to support. Now, trading is not like that, and it is not easy, and that's what people are taught. And that's why they fail, because in their mind, they start thinking when price get to resistance, it's a short opportunity, and when price get to support, it's a long opportunity, and that is not always the case. So we're going to look at another chart here, and I have my green support lines and I have my red resistance lines. The first thing you got to learn is there's no such thing as a price of support or resistance. It's a range. In the range of $98 to $95 is resistance. There's a range here of $87 to $3 is support. So somewhere around here. So it is support. So we know that if we buy below support or above support, we're fine. If we short above resistance or below resistance, we're fine, okay? Based on price action, of course. As you can see, they're selling. So just because they're selling does not necessarily mean it's going to go back to support. And that's what traders seem like they have a problem understanding, and I did as well. I just figured price will go back to support. Or if it bounced, price will go to resistance. Well, that doesn't happen all the time, okay? Sometimes it may go halfway there. Sometimes it may break out and go above resistance and get higher highs. Or it may break down below support and you get lower lows. Well, in this particular scenario, Microsoft is in an uptrend, meaning that price is going up more than down. Price is always going up and down. Whether it's in an uptrend, it's going up and down. When it's in a downtrend, it's going up and down. It's just, if it's going up more than down, then it's an uptrend. Okay? So, we got some traders here. And they're looking to buy Microsoft when it gets near support. So we drew our line. We could easily see price moving through this range, and we feel comfortable that if we could catch Microsoft at near this range, that's what traders seem like they have a difficult time understanding what near mean. Not what the word mean, but how it relate to what is support and resistance. Okay? So we have a range. We're just going to round it. 87 and 85. That is support. Well, suppose price go to 83. What are you going to do? It's near the range. That's a good opportunity to buy that stock if it start ranging and holding there. That's just fine. So you could always buy below support and above support, because there's no exact rocket scientist analysis available that says exactly where the buyers are going to actually come in, because everybody's watching this. Oh wow, we're waiting for this range, right? So we could buy. So you could see when price pulled back here, it went below the range. It dropped another $2, $2 to $3. Can you buy there? Absolutely. Absolutely. A break of support is not a short. It does not mean it's a short automatically. That's fiction, and it's an illusion. And that's what a lot of people are taught. A break of support is a short. No, it is not. Okay? Near support is a long. I don't care if it's a little above support. I don't care if it's a little below support, as long as you see price is holding. And the same with resistance. People think that resistance is a short. Resistance is a short or a long. Okay? If price could hold that resistance level, it'll become the new support. So in essence, I just want to give the basics. Everybody tell me they know about support and resistance, and that is great. It's great that they know the definition of support and resistance. I know the definition of a helicopter. I know the definition of a jumbo jet. I could point one out, but it doesn't mean I could fly one. Okay? So that is the problem that I see with traders, is they've been taught how to trade support and resistance incorrectly. And it takes years and years and years to get to the level where you could see that you were probably taught the wrong way to trade. Okay? So what can you do near resistance? You could go long near resistance or short near resistance, and that's just fine. You can go short near support or long near support. And that's just fine. So support and resistance, you can go long and short. That's how traders get burned more than any other time, is they think resistance is a short and support is a long. Resistance may be a long and support may be a short. Okay? So this trader, they read a good book on the stock market, and they're all waiting here for a price to hit support. They got their money. That trader knew that nearby is a good place to buy. This trader knew nearby is a good place to buy. This trader didn't know any better. They just read one of the best top trading books on the planet, so they thought. So they missed it. They missed it. Now, price jumped on them and ran again. Okay? But human beings are intelligent over years of trial and error. They learn, right? So now they know that if price is near, they're going to buy that stock the next time. Okay, so that was in January. Now price finally is pulling back, right? It's finally pulling back. But this trader noticed that support got broken. And guess what they did? They took their money and they bought. Or investor, whatever. Some traders, investors, they're looking long term, but they want to get a good deal. These traders, they're just looking to scalp, swing between support and resistance, okay? Trader, investor, pretty much they all need to have the same sort of entry point. Nobody really want to buy the top, right? That's what people say. Well, that is incorrect. It depends on what is going on with that stock at the time. If they have good news, they have a new invention, they have a new drug come out, new software, people may run in line to buy that stock. So as far as we're concerned, we could easily see that Microsoft had resistance in this resistance zone. And support in this zone. So we could see this better here. They look organized, that look as if this chart is really organized, right? And what happened? These traders are bad. They're bears. They've been short Microsoft every time it went to resistance. And they get out near support because they're pretty sharp, right? So this trader is a bear. A bear means people that like to bet on the stock market going down, okay? So, and then you got your bull. They like to bet on the stock market going up. And then you have your swing traders who don't care if it go up or down. They just swing trade, whether it's up or down. But we're going to talk about the bears right now. This bear, he made a lot of money. He's short and short. Two good shorts here. There's another short. You know where he think that price is going because it did it so many times before. $87. He's counting his money, right? But it didn't do it. It didn't do it. Why didn't it do it? Things change. Things change. Times change. The company is selling more product or whatever. So, and then this was proven to be a good support level. So as you can see, as time elapsed, this went right into the support here. You notice it's not going into this support zone anymore. Everybody know now, oh, this is a good price. The longer it holds support, the more they know that's a good price, okay? So now we can't even get there. This bear is still thinking it's going to get to his target at 87. But price isn't acting the same. He got in a trade. It did drop a little bit. It dropped from 97 to 92. But he see that it's coming back up a little bit, but he's not worried about it because he just know that he's a pro now and it's gonna go to 87. And that's how traders think, most of them that I see. So he's not gonna budge. This other bear know better. So this bear says, wow, price went back up. I'm still holding my position, but if I don't see it break this area, I think I better get out, because it seems like there's a new support level being established here, and it's not acting the same as in the past. Okay, so here it hit support, retested again, and drop. It looks exactly the same here. It hit resistance and retested. It looks the same. It hit resistance, retested, and now everybody's happy. The bears are talking about the bulls and how they gonna fry. Okay. So, but the trader that was noticing, okay, you had the first test, is chopping up here a little bit, but I notice here it's not going down near 93. So he gets out of his position so he could reassess. This bear here is arrogant, egotistical, and they know everything on the planet. They know they did it before, they're gonna do it again. They won 2 trades. They put 90% of their money in this trade, because that's what traders do. They have confidence. They take all their winnings and put it in one trade. Okay? But this time, it broke out, and, it does chop around. But, so he's like, well, he's just waiting to hit his target to exit. This trader ran. Okay, this trader took their money. They took their money, their little short money, and ran so they could reassess. This bear is just thinking about hitting 87. And so what happens? When it popped back to where he's short, he just looks at it because he knows what he's doing, right? And as it slowly climbs higher and higher and higher, he's like a deer in headlights. How dare that price do that to me? And I'm telling you, that's what most traders do. They look at it as if a deer in headlight. They're frozen. They just can't believe that this trade went against them. And so what happens? It just goes higher. And now it was at, they short 98. It's at 102. But now they see it going down. So now they still stayed in the trade. They feel comfortable. But all it did was use it as support and bounce to the moon. Okay? So resistance is not a ceiling and support is not a floor. A breakout above resistance could be a short or a long. A breakdown below support could be a short or a long. How do you know? You have to wait and see what happens to price action. So that's just a basic run on what is support and resistance, and how to trade it. So the illusion that people have is institutional traders just buy support and sell resistance. That's fiction. Okay? It's an illusion. Because 90% of people lose money trading. I said 90%. So that means if you're looking on a stock board, out of every 100 posts you see, 90 of those people are losing their money. And it's because they don't understand the basics of what is support and resistance and how to trade it correctly. They're at the illusion that institutions buy support and they sell resistance. Institutions buy support and sell support. Institutions buy resistance and sell resistance. That's why it was a breakout and it ran, right? They bought resistance. That's the only way it could go up. Okay? Someone they saw it was a breakout, they bought the resistance. And somebody had to push it up above resistance. So who was that? 9 times out of 10 it was institutional traders or hedge funds. Okay, because they have the money to move these stocks. So that is, in a nutshell, what is support and resistance? The battle between the buyers and sellers, supply and demand, and price points. This is a great way to find out how to enter and exit a position. We know that support and resistance is not an exact price. This is not rocket science.